Have you ever felt stuck in the situation that you cannot afford buying your home in the area you want to live in? Or felt nervous watching the property market skyrocketing so it looks like everyone else is making money but not you? Today, I'm about to introduce to you the strategy to catch two birds with one stone so you can live in the area you want while building wealth through property investment, which is called rentvesting. Yes, you may know what it is, but I'm going to actually deep dive into the topic today. In today's video, I will talk about what rentvesting actually is and why it is becoming more popular in Australia, and one absolute condition for rentvesting to work on your favor. Lastly, I will talk about how you can actually go about this. So if you want to find out more about the rentvesting and how it actually works on your favor, you definitely want to keep watching. Hi, my name is Eric Lee. I'm a chartered accountant with more than 15 years of experience and property investment advisor holding a real estate agent license as well. So, if you want to trustworthy information about property investment, please hit the subscribe button and the alarm button so you won't miss out any updates from me. Let's talk first about what is rentvesting. Rentvesting is when you rent where you want to live and buying an investment property somewhere else, usually in a more affordable location with better investment returns. Think of it this way: you get the lifestyle you want without having to buy into a ridiculously expensive suburb. For example, you live in, say, Bondi, but your first investment property is in Adelaide. And this approach is becoming more and more popular, especially with younger Aussies who are priced out of their dream suburbs but still want to get a foot on the property ladder. In order for the rentvesting work, there is one very important condition. You have to pick a suburb to rent where the renting is cheaper than buying. This is usually the case for many suburbs in metro areas, especially for premium suburbs. In those areas, rental is quite low, like anywhere between 2 to 3% rental yield, or sometimes even lower. For example, there's a Glen Waverley in Victoria. Median house price is $1.66 million, while median rent is only $440 a week. So rental yield is about 2.3%. If you buy a house in Glen Waverley for $1.6 million, borrowing 80%, your monthly principal and interest payment is $7,674 at 6% interest rate with 30-year mortgage. But for the same house, you only pay $3,206 rent. Even with a bit of buffer, there's a huge gap between buying and renting in this area. You know what? It is only about the loan repayments. On top of that, as an owner, you will have to pay council rate, probably around $3,500, and other repairs and maintenance costs as well. So, would it make more sense to rent in Glen Waverley than buying one? Of course, owners will enjoy the benefit of capital appreciation in long term, as the area is a premium suburb and there is plenty of demand for people who want to buy properties in the area. And that's why we call this strategy rentvesting. In order for this work, you must also invest somewhere. Probably areas that are more affordable, preferably with higher yield, and will give you better capital appreciation. I've seen many people saying blue chip properties performed better, but in reality, it's not the case. While we cannot generalize all the suburbs, as far as I see, blue chip areas go up in value more steadily, but not necessarily faster. There are so many areas that are performing better than blue chip areas, but they just look like performing better because they are more expensive. So even with a relatively low growth rate, dollar value of the growth tend to be quite big. Once this strategy is properly deployed, you can live in the area where your lifestyle works well, like close to work, schools, public transport, etc., while paying a lot less than those homeowners in the area. And also, you keep your feet in the property market and possibly build wealth faster. Therefore, if you use this strategy well, you don't need to sacrifice neither of your lifestyle nor investment returns. I know, some people may think if you buy an investment property first, you won't be able to get first home grants and some other concessions, etc. Yes, it is true, but don't get caught into those benefits too much. While those grants and concessions are valuable and suitable for some people, it may not really benefit you in the long term. So let's say rentvesting sounds like it could suit you, then what now? here's how to make sure you're not just following the trend, but actually using rentvesting as your strategic move. The first is analyze your situation and local market. Start with the numbers. How much would it cost to buy versus rent in the area? Then compare with that what you could buy elsewhere and what rental income it could bring in. And secondly, choose a property that aligns with your goal. Ask yourself, are you chasing capital growth or cash flow? Ideally, you want a balance of both, but your choice should match your overall financial strategy. And run the numbers like an accountant would. You want to look at net cash flow. Net cash flow means after all the expenses like mortgage repayment, rent, repairs and maintenance, and everything else. And don't forget to take the tax implication into account, like a negative gearing, depreciation, and capital gains tax, etc. If you actually want to know more about those topics, I actually already made a video for that, so you want to check out my YouTube channel for those videos. And also, you need to look at the long-term capital growth potential, because it is all about building wealth. You want to buy a property in the area that appreciates in value. And lastly, think about your exit strategy. Are you holding this property for 10 years or planning to upgrade it or sell it later? Knowing this upfront helps avoid messy surprises later. So get your plans and strategies correctly from the beginning rather than later. So rentvesting can be a clever stepping stone into the property market, especially if you are priced out of where you want to live. But it only works when you approach it with strategy, patience, and a clear financial plan. So before you dive in, do your homework. Or if you need assistance with setting up the solid plans and strategy for your property investment, please contact me using the details in the description below. I hope this video provided you with some values for you to be a better property investor. And if it did, please hit the subscribe button and I will see you in the next video. Bye for now.